Welcome to Swagger's Lifestyle.
So back to our discussion.
Okay.
How do you build an investment portfolio?
Okay, first thing you need to have an investment goal. And in having an investment goal, you need to specify what you want. When you have the goal, you tend to come up with an achievable plans towards it. I'm sounding quite theoretical.
Yeah. So could you
Let me
just
let me
break it
break
down with
it down.
examples?
Okay,
Yeah,
so let's
it
say
helps.
I'm about today. I want to have investments, passive investments that can give me annual returns of, let's say, 5 million naira every year on year. So that's the goal. So it's not for me to set out how do I achieve this. That's if I don't set out to achieve it. Okay, what kind of investment do you think can give me this money based on the resources I have now? So I can decide. Okay, let's say I have 50 million. Talking to a stockbroker, they might tell me, okay, there's these shares that year on year pay dividends, return on equity of as much as 15%. Remember that my goal is to have something that gives me for 5 million. Under that side, I can decide, and if it's a blue chip company, they've been doing it over years, you check their financials, everything is good. I know if I'm putting that 50 million, based on historical facts, this company pays ROI of 15% at the end of the year's dividends. I will know if I'm buying the shares at a figure. Every year, I'll be paying for 7.5 million. That's an investment plan. I'm also now breaking down. So, okay, let me diversify this investment. Okay, let me put 30% of my investment in real estate. Let me put 30% in shares, and let me put 40% in the money market. So, the first thing is to have that goal. It's from that goal you can now set up plan. There's no way. When people say, when I hear people say, in your investment, you must 50% real estate, there is no hard and fast rule around this thing. You must propose on yourself and work around it. What do I want? It's from what I want that you will know what. Like some people might say, okay, I have 500 million. I just want an investment that is so safe, so sure, that can give me 5 million a year with 500 million. You know that one you'll be talking about treasury bill, you're talking about money market. Those are almost foolproof investment. So there's no fast and hard route to anybody. You need to propose. But there's plenty investment platform and you need to know which one works for you.
What are the different types of investment?
We have the money market, which I said earlier. What is the money market? Money market, they are fixed income markets. Treasury bills, bonds, that's government bond, corporate bonds, where what you do there, you subscribe to this bond. That means you bring in your money to this investment at an agreed rate. So let's say treasury bill is 5%. You bring in 10 million to buy treasury bills. You know, at the end of the year, you're supposed to get 500,000. That's the money market. It's one of the most flexible. You can easily cash out if you need to. You can easily get your money back if you need to use money for something. And that's it. We also have the capital market. What is the capital market? Capital market is a stock exchange, IPO. And yes, you invest in equities, you buy shares of companies, you either on the secondary market, the equity market, or you subscribe to IPO, private placements. So in that one, you're investing in an organization. But that one also, you need to have a fair knowledge of the organization. You need to have historical facts. You need to look at their books. You need to look at how well they've been doing on the capital market. If that's where you're going to the capital market over a period of time. So for that one, you need an advice of a seasoned stockbroker. Don't just look and say, Champions Brewery last year was 69 kobo. It has grown to 3 naira. What is driving it? So you need the knowledge. You need knowledge of the stockbroker to look at those facts. So you can also invest in the capital market. We also have the one a lot of us does. That's the real estate. That's buying land, houses, both commercial and residential. That is a time-tested one. When you have good real estate, you can invest on them and and the yield can be as good, but that one also, you need to be sure what they're buying. You don't just go and buy blindly. You need to consult your attorneys. Okay, what is it about this land? What is the historical curve? What is the search result? Don't just be impulsive. Okay, this developer, what's the historical fact about him? Is this his first estate is developing? The estate he has developed before? What is the testimonials of the people there? What is the perception in the market? So people just have to be careful also on that. That's on real estate. We also have a lot of other investment in centers. Some people invest in jewelries, in gold, in diamond, which they store and they sell after a while. We also have people that invest in foreign instruments. So that's Eurobonds. That's Eurobonds. Some invest in capital markets offshore also. So there's various investments for people. Some might also invest in businesses such as farming, etc. So they are quite numerous of things, really.
So, what of crowdfunding?
Yeah, crowdfunding. I'm always very careful. Let's. What do you want? What do you want me to talk about in crowdfunding?
Yeah. So, because over let me say within 1 or 2 years now, there's just been a lot of crowdfunding out there as a form of investment, and a lot of people have gotten their fingers burnt. So, can we talk about crowdfunding? Is it safe? Is it something you should dabble into? Is it something that you should, put red flag, run away from, something like that?
Okay, let me put it this way. Why investing? I said this when we're starting. I say you should know what you're investing in.
Yes, you do.
Know it well. And when it's too complex, there's a problem. Now, crowdfunding in a sense is not a bad concept. It's a concept that has worked in different climes. What does crowdfunding mean? It means that I have this idea, I have this business, I've done the survey, I've done the visibility studies, I've probably even put in my substantial level of investment, the business has stabilized, there's room for expansion, and I think I can now bring other people into the business by contributing one way or the other. So in the fair value, in the theoretical aspect, fantastic idea, because what it does is that it helps you to spread your risk over a lot of people. And again, it also serves as a platform to also get, because when people are investing in a crowdfunding store, you're also expect to bring in some level of maybe some level of knowledge that you can leverage on. But what we've noticed in the past few years is, which I'm a little bit worried, but I'm also being careful, scenario whereby people just bring out requests for crowdfunding without bringing out the facts behind the figures. So you see me, I will say, Emerald Farms is looking at raising 500 million. And we have farms in Akure and Ogbomoso. We do cashew, and we will pay 30% in a year. Now, we put it out on social media. We use influencers. The problem is this, and we don't bring out historical facts of our farm in 3 years. This is what it has done. Not us just bringing out with the seal or probably an international or a nationally reputable auditor seal behind that people can trust what they see. So we just see people bringing out those things, people subscribe, and things keep going haywire. But again, my advice to people is just make sure you go behind the figures. Sometimes things are not as real as they look.
Okay, thank you so much for that. How can I have an investment strategy?
By having an investment strategy. Okay, now this is a strategy. Over time, strategy evolves. Strategy is, what is real strategy? Strategy is just the actionable, tailor-made plans to achieve something.
Yeah.
For you to have a strategy, you have a goal.
Yes.
And your goal is and save. Like now, the level I am now, if it's not safe, I won't even go. It's the balancing old people kind of investment strategy. I'm not so ambitious. I'm not passive. I'm not so. I'm more about my strategy is mainly put emphasis on safety now. When I was younger, emphasis was on yield.
High risk.
Risk was on yield. But over time, I've had to revise those strategies. So it's for you. You have to sit down and determine. There's no all this thing. There's no hard and fast rule about it, really. If you think you want to have your risk appetite is quite high, then you tailor made a strategy around that thing. So you know you might want to invest in Bitcoin. Because I'm not after safety now. No, I won't. Maybe 5 years ago I will, because I was all about yield and growth. But now, more so, I will very be careful in giving advice in that area. Okay. Set your investment goal, then drive the right strategy to meet it.
Okay, so talking about goals, what do I need to have in mind when writing that? Or what do I need to look at?
Where are we today? Where am I going to be in 5 years? In between that time, what will I be doing? That should form some of the things you look at. Then again, what are the social, political factors around me in setting my goals? Now, let me give you a scenario. That's COVID now. If you are setting any goal now, you have to factor the risk, the health, the pandemic's risk. In an election year, in setting your investment goal, you need to look at socio-political risk. When you live in an unstable place, plagued with war and disturbance, then look at war and other risks. So, the first thing you need to probably do is sort of yourself, then craft around that thing a clear vision of what you want to do, then you set up your goal and your strategy around it.
Okay. Thank you for that.
I try to avoid a lot of questions.
I really know, because it's very glaring, but it's fine. So please, can you explain the 5 components of financial literacy, which is the earn, the spend, the save, the invest, the borrow, and the protect?
Earn, that's input. Spend, output. Save, you're keeping money for emergency or short-term spending. Saving itself is not investment. People should know. Savings is you're keeping money. But when we look at type of money, we have the type of how we spend money, use of money. That's when we have the transactional, we have the speculative, we have the precautional also. That's the transactional, that's spending the precaution against any emergency, then the speculative to attract yield. So, N is what comes in: salaries, dividends, royalty, rent. Spend, diesel cost, transportation, rent cost. Save, you're saving against anything will happen. Keeping money aside in a bank, in piggy vest, in colo, those are savings. Investments, you are putting your money in anticipation of profit. You're putting it in a venture that will yield profit. That's e.g. I bought 5,000 units of Gbogbo a day PLC on stock market, and at the end of the year, they're going to pay me 10% ROI, and also the cost of the shares has grown up. That's investment, really.
Okay, so borrow and
borrow. In borrow, in sometimes we only have shortfall. We might need to borrow. So borrow is just the act of taking leverage to cover up a shortfall. E.g., you can do it through your bank, you can do it through family and friends. But again, you have to be sure that your hand can really take care of the borrowing. Because if you hand, let me give you a scenario that happened to me some time ago. Someone that used to work with me came to me and said he wants to buy something. very good thing in his village. Very, very good thing. It's a very good thing to do. It was earning 125,000, and that thing was, if I can remember, it's about 6 million. So it's going to take him, without spending 4 years.
4 years to pay back.
To pay back. So I told him, no. So there must be a balance when you borrow. You must have capacity to pay back, and that's it. What's the last one?
Protect.
In terms of protect, really, I want to put it this way. What you have. Let me tell you, one of my boss told me one day. Then I was running an informal lending scheme. So we have some of our friends, we're working together, they'll come and meet me. Today, borrow us 50,000, I'll give her 55,000 when they pay salary. So one day he called me and said, today, this yield is good. It's good that the yield is coming in. But sometimes non-lending itself is even bigger profit. Not investing in that thing that was supposed to even give you 25% might even be a bigger profit. Because if you lose your money, let's say, let me give you a scenario. Let's say I have a friend that doesn't have integrity. But when he said, Tunde, borrow me 200,000, I'll pay 50%.
Wow, that's juicy.
So it looked juicy. I'm excited. So I gave him the 200,000 and he goes away with my money. I have not gained anything. I've lost money. Yeah. If I didn't lend money, I will feel I lost 50%, but I didn't actually lose any 50%. I actually gained 50% by not lending him that money. So protect is when you have anything you have, try and not supposed to protect it. So people also should not feel bad that you did not invest, you didn't buy Bitcoin, don't feel bad. Sometimes that your money is safe, is a better yield, is a better profit than sometimes trying to be very ambitious without where you can lose your money. That's for me. I feel safety is key. So I'm trying to use that to explain protect. You need to protect your resources.
So at what point should one borrow?
You should borrow. Borrowing itself is not bad. People should also know this. When you have shortfall, you will need to borrow, but you have to be clear. Let's take a salary earner. When against receivables, against salaries, you could borrow. But I want to go to business people. You should only borrow when the business needs the money. And let me give you a scenario. Let's say I run a restaurant, and I've invested. Number one, let me even start. I always try to discourage people, especially starting business, from borrowing, especially from financial institutions. I used to say, if you want to start something, maybe your money is better you take from families and friends. Those ones, they won't be on you. But when you go to a financial institution to borrow money to start a business, there's a lot of things that happen. Yeah, on theory, on paper, things looks well. But when you get to business, a lot of things that you don't envisage startup. So I don't encourage borrowing at starting. Now, at what point do you now borrow? Now, let's say I run a restaurant and in Gwarimpa. And I started, we have clients, and lunchtime is jam-packed. People cannot even access food. You see some people even going away because they could not, because of the queue. And I'm thinking, okay, I need to start thinking of a second outlet. Yeah, that's a good investment stock because I already have the market. The demand is there. I'm not borrowing to go and create demands. The demands are there. So I can borrow to scale up. So it's best to borrow to scale up. It's also best to borrow when you use some of your resources or family business resources to start something. And you've learned your mistakes, you've burnt your fingers, you've seen the practicality of the business. So purely in scaling up, it's a good time to borrow, really.
Okay. How can I develop financial skills and personal financial management?
Read the Bible, number one.
Good.
Secondly, you need to read books. You need to also listen. Now the internet is good. If you go to the internet, you see a lot of people that you can follow that gives you regular tidbits on investing and developing strategy plans and business and investment plan. Also, there are books that you can read on investing, on prudency, on strategy management that will also guide you. Then I'm a fairly religious person, and I also believe that the Bible gives you a clear idea of it talks about sowing when it tell you about sowing season and when they harvest, how they do. So Bible also will help you also. Then you should talk to people. Don't be shy about it. It's not a bad thing to tell people that, look, I don't know anything about bookkeeping. What do you know? When you talk to people also, you get quite a bit of information on them. So you just have to desire to have the information, then go all out. TV, Google, internet, talking to people, reading your Bibles, and you'll get it.
Thank you very much.
Thank you very much.
Thank you so much for hanging there, and hope you were able to learn one or two things. I actually learned a lot. And sorry there is no giveaway today because the person we interviewed is a rich man and he didn't drop any money. So we are saving. We've started from today. We are learning to save that which God has blessed us with. Try as much as possible to save for emergency. Invest so that you'll be able to replicate and multiply that which God has blessed you with, and also protect your savings. If you want to do high risk with high returns, ensure you know what you're doing. And also, if you want to take the safe route, ensure you know what you are doing. There was something that I learned from my dad growing up. Every teller, he has a copy. Every check, he has a copy. Every receipt for purchases, he has a copy. And he was always documenting his expenses, his income, and all of that. I learned that from him. In as much as God has blessed us with a lot of things, he wants us to be prudent about it. So teach your children how to be financially smart, how to save. It's not like, sorry, I would say Yoruba word, they don't use the whole hand to eat. Save for the rainy day. So teach your children how to save. And for you that, you're living a YOLO life, which is good, try as much as possible that you're not eating everything that is coming your way. Save, invest, protect that which God has blessed you with. I still remain Gbogbo Swagger, and this is Swagger's Lifestyle. Till I see you next time, stay safe, love yourself, save your money, and invest. Love you. Bye.